Okay, we are going now. So, Rochelle, we've got an interesting topic today that you're going to go over LLC versus S Corp. I think any business owner has asked this question about 1,000 times of their advisors. So I think this is a great topic. There's a lot of noise and TikTok experts out there talking about all types of stuff, right?
Yeah.
So I think it's a great topic. And we'll let everybody join in and then we'll get started whenever you're ready.
Ready when you are.
Perfect. I'll go ahead and advance it, all right?
Okay.
Here we go.
So, why business entity choice matters? There are two primary reasons that people want to form an entity, and one is for legal protection, separation of business liabilities from their personal assets, and the other one is to reduce taxation and gain some flexibility. So, these choices can affect your tax liability, your legal liability, and your long-term growth options. So traditionally, there's been the sole proprietorship, which is basically just somebody that starts a business. They don't do anything formal with an entity. And then there is a partnership, which is two or more people doing business together. And then a corporation that can be either taxed as a C Corp or an S Corp. So now, I say now, it's been a few years, LLCs came into existence, and the IRS said that an LLC can choose how it's going to file for tax purposes. So it can file as a sole proprietor, as a partnership, or as a corporation, and also like as a C Corp or S Corp. So when an LLC chooses to be filed as a partnership or a corporation, the legal protection given by the LLC doesn't change no matter what the choices are regarding how the federal taxes are filed. So legally, yes, an LLC. Tax wise, well, once you choose to go with an S Corp, that's what you are in the eyes of the IRS. So I want to compare how these various entities are taxed. The C
So,
Corp, yeah,
oh,
the C Corp, for example, it has double taxation. So it's usually not a good choice. It does have its purpose and its place, but generally speaking for a small business, a flow through type is going to be better.
and then we've got this right here. You want me to advance it?
Um, so the sole proprietorship files a Schedule C within your individual 1040 return, so it's a little less expensive. Of course, there's no legal protection, and 100% of your bottom line is going to be subject to FICA tax, self-employment tax.
So this is like if somebody's has a small business and they're just all their accounts are in their name personally, they're getting paid directly,
Mm-hmm.
they don't have another entity, right?
Correct. So let's talk about what franchise tax means. It's not a great name because people will say, well, I'm not a franchise. Well, yeah, I know. Texas should have called it something else. And many other states call it that as well. So I guess the way that they see it is you're you're getting the legal protection from the state laws. And so they're going to tax some of the businesses to have their own income. And the franchise tax changed to a margin tax, which was not good because it was only the gross sales minus direct cost of goods sold, and then it was taxed on that margin. So in the past, if the business had a loss, there would be no franchise tax. But now it's on the margin, but it's not triggered until the gross revenue is over 1,200,000, 3 million four. It's a pretty big number. It changes, it goes up every year. The majority of my clients, we don't pay franchise tax. Um, so a C corporation is going to be taxed when it earns its income. One good thing about that is right now the C corp rate's 21%. But whenever the owner wants to take money out, either in the form of a payroll check or a dividend, it's going to be subject to tax again. So then you're really not getting, if your goal is to earn money and take that home to live on, C corporation is not the way to go. Now, it does allow more fringe benefits in most entities. So again, it can have its place. So the sole proprietorship, again, no protection. Single member has good protection. And the LLC filing as a partnership in Texas, maybe some other states, it's a stronger legal defense. And the corporation is good, but there's more rigid compliance rules like doing annual board meetings and drawing up minutes and just these formal things that if you don't dot those I's and cross the T's, you could blow up your legal protection. So, an S corporation, it can reduce your self-employment tax by, let's say that you're, profiting 100,000. You could set your W-2 at 30 grand, and the self-employment tax on that would be about $4,500. Versus like if you were being taxed as a sole proprietor and paying FICA tax on the full 100, you would be paying in over 15,000. So that's a pretty big difference. The partnership, okay, so with the S Corp, you have to have payroll. So you have to have a W-2, W-3, 941, 940, TWC, all these payments that have to be made and then all these filings that have to be done. So it's time consuming, which translates into expensive, okay? So with a partnership, you don't need the payroll administration. And the way that you pay yourself out of the partnership is you take what's called a guaranteed payment, which is no different than what your W-2 would be, but it's not going to go through all that red tape. And then the rest of them, say that you did take out 30,000 as a guaranteed payment, you would take the other 70 out as a distribution. So it's the same savings as the S Corp, but there's other advantages, I believe, with a partnership versus an S Corp. So,
So what you're saying is you can get the same advantages of the S Corp in the partnership without the added compliance.
right. Now, if a business owner is going to have employees anyway, then that doesn't matter so much because putting the owner on payroll doesn't trigger the expense of all the payroll administration.
Because you
But
already
there's
have
still
it.
some other advantages with the partnership. So, with a corporation, Jordan, say you and I were 50-50. We need to put money in 50-50. We need to take distributions out 50-50, period. With a partnership, um, we could be 50-50 owners, but I work in the partnership more, so my distributions are going to be 60 or 70 and yours are going to be 30. So,
So you can adjust some of that stuff.
yes. And a couple of other advantages with the partnership is you can take a home office deduction. With the S Corp, you can't. And
Oh.
let's say that I chose to go and take out a prospect and really spend a lot of money on a fancy dinner. But Jordan, you're like, I don't know. That's a risk. I don't, I don't like that expense. So as a partner, I could go take the clients, pay for everything, and then I can deduct those expenses on my own personal return. You cannot do that with an S Corp.
That's a
So
good, that's interesting.
yeah, and go ahead and forward it. So here's a big difference. It's not the easiest thing for people to get their head around, but it's about bases. So, Jordan, let's say you and I put in 10 grand each. So now we each have $10,000 in bases. So those dollars could be spent on expenses, which we can write off. If you go get a loan in a corporation, it does not create bases. So we could put in 1,000, go get a loan for 100, spend the
Mm-hmm.
100 on, you know, starting the business up, and we would
Mm-hmm.
not be able to take those deductions because there is no basis. Loans don't create bases in a S corp, but loans in a partnership do.
So that's like if you have that can create a weird situation where you can get taxed if you like distributed some of that loan um without having enough basis, and like you get in theory you get to negative basis if you got a big loan in your business and then you took some of that money out of the company.
Yes, it's
It's kind of
an
complicated, but that's a
overdistribution, which
yeah,
you're supposed to claim on Schedule D as a capital gain.
right. That's not good.
So of course, the IRS is preventing you from pulling a loan out against the business and taking the money home without paying
Right.
tax, right?
Right.
So I think I already covered those. So the LLC
Yeah,
can
so
be
you
taxed
can
any way they choose, right?
so when somebody says they're taxed as an LLC, that's really a misnomer. Their
Right.
entity is an LLC and they could be taxed as a sole prop, a
Mm-hmm.
partnership, or an S corp.
Correct. And oftentimes I hear people say a corp, what do they say? A LLC corporation or corporation
Yeah,
LLC. That's you're either an INC or you're an LLC, right? For
right.
the purposes of the legal protection, and then you file whatever you're going to file. So
Exactly.
yeah, so if you choose, no, if you go back one side,
Sure.
it is literally an IRS rule that if you say that you formed an LLC and you chose the S corp election, after 5 years you could change to a partnership. But even though that's their own law, it was difficult to get them to make that change in their system before COVID, and now forget
Even
about it.
worse.
Yeah.
Yeah, even worse.
Mm-hmm.
So don't change.
Mm-mm. Yeah. Anymore, if somebody's formed an S corp and they're like, I really want a partnership, I say, okay, start over, you know.
Yeah, yeah. Start
Um,
over. Let's try
yeah.
again.
So fixed assets, there's been a safe harbor rule now for a while of 2,500. So prior to that, any asset that you bought that was going to last more than a year, the IRS wanted you to depreciate it over its life. Now, if you buy, say, a computer or piece of furniture that's less than 2,500, you can write it off in the first year.
Oh, that's nice. Yeah.
One thing to keep in mind is that, okay, most of us know what real estate tax is. So there's from the county's perspective, there's two types of assets. There's real estate and then what they call personal assets, which personal assets are computers, chairs, etc. But there is business use personal property that businesses have to pay a little tax on every year. So
Okay.
sometimes if you wonder why dealerships want to get rid of their car inventory before December 31st, that's a big reason because property taxes are also charged on inventory.
Okay. That's good to know.
And then sales and use tax, of course, the rules are not getting easier, especially with internet-based companies. And but one thing I'll point out here is that unless you're exempt from sales tax, which for example, I don't have to charge sales tax on my services, then the only thing I have to think about is if I do buy a computer that's shipped in from California and they don't charge me sales tax, I need to pay Texas the use tax. So that's where the word use comes in. So I'm sure that's
That's hard to keep track of. Good luck with that.
right. Yeah, exactly.
Jeez.
All right. You can go ahead and forward.
And
So,
that's,
oh,
oh, sorry, I got
that's
oh,
okay.
back here.
So no matter which type of entity you go with, you want to have a separate bank account. For lots of reasons, but a good example is if your business were audited, you don't want to hand them over all of your personal bank statements and credit card statements. They don't need to be nosing in where they don't need to be nosing in. So if you get audited, you would hand them just the business bank account, for example. And then you don't want to commingle, meaning you don't want to pay personal bills out of your business account. Go ahead and take the money home and then pay your personal bills. Financial controls are good, but that's usually more important when you've got someone other than just the owner managing the bank account and paying the bills.
Right.
And so, and right, good documentation. If you get audited, you want good documentation. And if you get pulled into a lawsuit, you want the same thing. So, proper documentation is important.
Perfect.
And let me look at my little list here. Now, one downside to say either going with a limited liability, filing as a partnership or an S Corp, you're going to reduce your self employment tax. But when you get to the point where you're going to draw Social Security benefits, it could impact them. But I think that you save 10,000 or what have you a year and put it away on your own, you're going to do probably better than the return from Social Security.
Probably right. For most
Issue.
people, at
Yeah,
least.
even if it just goes in your mattress, maybe.
Yeah, yeah, maybe
Um,
so. Who knows what'll happen in the future?
so that about covers it. I don't know if we have any questions.
Let's see here. Let me see if we have any come up. None right now. We can wait a few minutes here, a few seconds, but I think that's really informative. I think the takeaway is really talk to us. We can give you some guidance on this and help explain what makes the most sense for your situation. But I'll leave the contact information up there for a sec, and feel free to reach out if you have any additional questions. Thanks, Rochelle.
Thanks. Have a good weekend.
You too. We'll see you.